And welcome to Experts of Work and the Future of Reward we're looking at today. This session is for members of all three of our networks. If I can trouble you to put yourself on mute, not you, Mark, that would not be the same if you did that. A big welcome to Mark Charles. Mark is one of the UK's foremost reward experts. He's a companion and former VP reward with the CIPD. He was founder of the Total Reward Group, which is now part of Gallagher. He's headed up global compensation and benefits in 3 FTSE 100 and 2 Fortune 500 firms, sharing a number of different repos in a variety of sectors as well. So send us questions and suggestions via chat throughout, and we'll have Q&A in the last 15 minutes or so, with a hard finish at 11:45. As I say, please put yourself on mute if you haven't already. Thank you very much indeed. And Mark, thank you very much indeed for doing this. Much appreciated. And over to you.
Great, thank you. Well, thank you. Welcome. Good morning, all. As you mentioned, I need to load up the PowerPoint, but I'll just say a few words of introduction. That would be good. What I'm going to do this morning is offer you quite a rapid flyby of the current reward landscape. And what I want to do is to take us up to a level where we can at least see over the horizon now and have a sense of what might be coming, so that we can anticipate how future reward is likely to unfold. But also, as we dash across that landscape, I want to call out some of the landmarks on the journey in an effort to really provoke some interest, to prompt some discussion, and also to give you a range of topics that we might then pick up on and discuss as we step into this. So let me just open up PowerPoint, and which is I've put together just to give us some structure really to the conversation this morning. So this is the ground that I'd like to cover. What I want to do is race through five areas, looking at organisational culture and essentially how talent attraction is going to play out in the 20s. Look at reward from the macroeconomic context of what's going on in the economy and where we're going to go, what pointers there are to future rewards. I'll have a look at the topic issue of working environment and particularly the future of working time. Touch on well-being and how people are looking to repackage the psychological contract, to touch on career and think about the relationship between future career progression and earnings, and also then conclude with some observations on communication and really some of the required capability that we're going to need in the new paradigm. So let's just overview what we're going to do. These are 6 topic areas we're going to dash through. You'll see from this, my mindset is very much that of total reward. I'm not the mechanical type of reward practitioner, in that, with the possible exception of sales professionals, few of us actually come to work because we're coin operated. There's a rich range of things which shape our decision to join an organisation, to release discretionary effort, and ultimately to leave as well. So let's open up the first of those, and I'm just going to give you sort of a couple of minutes on each of these topic areas, really, because what I want to do is lift the lid and, as I say, to prompt your thinking and invite some discussion. So at the moment, we're seeing in organisational life lots of organisations calling out flexibility, and you're particularly working from home, and what we would regard previously as kind of atypical working patterns as a real point of attraction. And here's a few statements that you can read for yourself, which are all from the public domain, and they just give you a sense of the range of opinion that's emerging in the business world. We're seeing some organisations articulating, these are mostly comments from CEOs, articulating very clearly that they think that working from home, working anywhere, that this is going to be a key point of attraction. It's going to enhance productivity and well-being. And then alongside it, you've got the skeptics like Jess Staley of Barclays, who's signaling that he doesn't think that working from home is sustainable, that collaboration culture will take a hit. You've got Gallup analysis from the US, but I think it still crosses the pond. Gallup analysis to challenging some of the perceptions that we're seeing in the public domain about productivity growth. And the most important one, I think, is that the Harvard Business Review, the debate is just beginning. And actually, whether the points of attraction for talent in the future are going to be in the flexibilities and the hybrid working that we imagine or not is going to be discovered through lived experience. We can talk about these things, we can imagine, but it's actually going to be in the lived experience that we discover the extent to which these things make a difference. And that's important because we are going to have to try a lot of things, and we're also going to have to recognize that some of these things, such as flexibility and hybrid working, will become the norms in a lot of organizational sectors. And actually, you'll stand out if you don't offer these things rather than stand out if you do. A bit like flexible benefits, really. If you're a large organization, everyone got to the point really where they're embracing some sort of flexibility in their benefit provision. So a few thoughts on talent attraction. Let's step into to reward and just think about the macroeconomic context at the moment of what's going on. I was saying to Richard just before we sort of came on air, is that as the years go by, I seem to think there's less I know than more I know. And some of the things that have happened in the macroeconomic environment are just truly perplexing. But here are just a few headlines to register about, what's going on in stock markets, what's going on in interest rates and unemployment. I think the most striking things for me really are that unemployment hasn't grown to the extent that we thought it would by historical standards, and that reflects the effectiveness really of the furlough program and government interventions of a similar nature internationally. But it does conceal a very serious issue about unemployment rates amongst the 18 to 25s, and it's really accentuated the challenge of getting into work when you have limited experience. And the other key thing I want to draw your attention to is what's going on in inflation. I think if you look at what's happened in stock markets and in asset prices, property prices, for example, they are explainable by sort of classic economic theory through ultra low interest rates. But the past 3 months particularly, we've seen a real step change in inflation, which is signalled in the bond rate, in the 10-year bond rate. We've seen 10-year bond rates double in 3 months. So gone from 0.8 to 1.6. That might not seem very much, but if that trajectory continues, we're going to see inflation coming into the system. For governments, inflation is a two-edged sword. It adds to the interest burden to repaying government debt, and that will bring forward the timing of tax changes, punitive tax changes, which will impact us all as citizens and employees and corporates. But actually, on the other hand, inflation would serve governments because it would enable them to erode the real value of their debt. So I think governments are actually quite tempted to encourage inflation, and that's going to feed through to the reward environment in some really quite unhelpful ways in the next 2 or 3 years. In terms of reward, what's been going on? Well, the rolling, evolving themes continue. We've moved from this sort of collectivism of kind of the pre-Thatcher era to a more market individualism in pay decision making, and that's been progressively breaking down. And we're seeing now what I call values-based reward being a really intensifying trend. That was already there pre-pandemic, but it's really been accelerated and intensified by societal change and value change, which is coming through. I'll say a little bit more about that. Here's the key elements of value-based reward, which I think is the big theme for reward at the moment. Distributive justice is the raging theme. That's showing up in gender, in race, in challenges to pay structures, in executive pay. Again, constraint by executives is very much back in vogue. So distributive justice is going to frame a lot of our reward practices in the next few years. And you're seeing just, I mean, you may have seen just in the past few days, the Lead A landmark success in ASDA. It's got a long way to go, but that's one of the examples of what's coming through. There's a lot of noise around gender and race-based pay differentials in the UK market at the moment as well. Secondly, reputation-based reward is increasing its prominence. Again, if you read the papers, you'll see how so many investors are distancing themselves from the Deliveroo IPO over concern about the reputational risk that attaches to their reward model. We've seen the government propose restrictions on, put out a consultation paper restricting bonuses and dividends for businesses which have had, don't have sufficient funds on their balance sheet, or who have had accounting issues. Obviously, Carillion was a big one, but Patisserie Valerie as well. The cafe chain, bakery chain is another example. So governments are legislating to restrict the practices of private sector firms certainly in bonus payment. And we're also going to see around that reputation-based reward agenda a lot of restrictions on organisations paying bonuses when they've taken furlough money or bounce back loans or whatever the form of government support is that they've engaged in. And third up on values-based reward is that recognition programs are surging back. I've said to Richard, again, just before we started, in the consultancy business that I'm still associated with, we've increased our headcount 25% this year. That's astonished me. I didn't really see that coming. But the highest incidence requirement has been around recognition programs. They're really enjoying a renaissance. You're seeing some high-profile ones like BT's £1,500 per employee, stated bonuses, multi-drop delivery drivers are getting these sort of going the extra mile programs. But there's also an undercurrent there where the failure to recognise contribution is going to come back and bite employers and create unrest. Nurses in England at the moment, that's to the fore. So that's just to dash through some of the key reward themes. Let's just pick up on the next kind of wider theme and future working time. Again, lots of conversation going on about where we're going with working time. Commercial property market gives a really interesting insight, actually. Prime office space is really still top dollar. There's no diminution of value in prime office space. That tells me that corporates are looking to maintain, showcase attractive offices where employees will want to come to work, maybe for limited periods of time, but a desirable location. But subprime offices, that's that kind of 1970s office block that looks like your school. Those sorts of buildings, their price to them is in absolute freefall, and surely masses of those are going to be converted into residential accommodation and the like. We are also seeing, alongside lots of talk of hybrid working, acceleration of AI, bots, automation of warehouses and online transaction processing, which will also diminish the need for traditional office environments, but there will be considerable inequalities. And that's the second point in here. Working time differences are becoming. And this month, you may have seen whether it's factual or not, it's capturing the headlines. The Goldman Sachs case of young professional said to be working 95 hours a week. At the other end of the spectrum, we've got publicity of people like Teleperformance, 10,000 UK employees providing mostly contact centre services to public sector organisations, utility companies, heading for really quite intrusive webcams where people have to, not allowed to eat on camera, got to have ordered breaks. It's like clocking on and off, but via webcam. And so there's there's quite a bit of activity going on to counter the sort of shirking from home, as well as those who are promoting working from home. And some businesses are in this space are really just exploding with customer inquiries at the moment. I think what's going to happen is we'll see a likely equilibrium emerge around working time at what I call the collaboration layer. So what we're going to see is a lot of employers make mistakes. What I consider a mistake is that they will put the choice in the hands of the employee to decide when they come into the office. But my experience of flexi time in the public sector in the 80s and the 90s is that it doesn't work. That if you put the decision making in the hands of employees, you find, as Jess Staley said in his quote, a lack of collaboration. You step outside the office to talk to the people you need in a team meeting or a project meeting, and they're just not there. So I think what you'll see happen is the shift will move from organisations prescribing working time on an organisational level to one where it becomes team-based, and therefore within teams, the pattern of working time is defined. New Zealand's a really good case study of this. My two daughters work in New Zealand, so I've got some perspective on this. They started off with a free-for-all. Now across the country, very much at the collaboration level, are the days when you can work from home are defined. They won't be the same for the organisation, but they'll be this day for the marketing team, this day for finance. However that plays out, though, there are going to be big disparities between work groups, and I think that will become quite noisy in organisational life. So those are a few observations on working time, and then more briefly, just this couple of other areas just to close us out. Lots of people are talking about mental health concerns. I think there's a screaming need for integration around the whole well-being agenda. Again, as for those of you who are here just at the beginning of the call, there was a conversation going on about the challenges of joining an organisation and integrating and onboarding. I think that the issues crowding in on mental health in the workplace are not just about what we think of traditional well-being programs, but actually they have these issues of working time pressures, the learning support that you enjoy. I think there's enormous underestimation of the value of the peer group experience in contributing to good organisational health and personal well-being, and also the inclusion agenda. People will feel more left out of things because they just won't be around in the office, and that will be that will be damaging. So I think well-being needs to move into a much more integrated approach in its thinking and practice. And I think people who will differentiate themselves in the market will those people who will be able to put in a comprehensive package which covers off all the bases and also provide some really attractive offerings to working from home or working in a hybrid way. What about career considerations then? Just the one before last in this sort of run through. In terms of career considerations, I think what I call the privileges of proximity in a real state of flux. If you've worked in a big organisation, you know that those people who work in head office in support roles or divisional offices, you will generally get better paid than people out in the operations. And also they tend to advance their careers more readily because they get noticed. Your careers and earnings growth is likely to be amplified even more by those who can achieve personal proximity to their boss or their boss's boss. and smart people are going to manage their proximity as a means of advancing their career and earnings. And a lot of people are going to feel left out. And in a value-based reward environment, there's going to be a lot of calls of inequality. I think earnings growth is heading for a period of disruption. We've seen over recent years a lot of organisations complaining that employees are leaving and saying, well, I need to move on in order to grow my earnings because there isn't the earning growth opportunities here. I think that's going to be more accentuated, and we're going to see differences between sectors which are so extreme that I've never seen anything remotely as extreme in the private sector in my working life. If you want to make money, I just think about how you're going to. You work in an HR role, you could work in any business. You think the prospects of making money in aviation compared to tech, they're quite extreme. And then alongside private sector pay pressures, we're going to see pressure for the public sector to have a sustained period of pay freeze. That's going to be difficult. So I think too that salary structures and pay differentials are in the melting pot. When people work alongside each other, they're much more sensitive differentials. When they're remote from one another, that becomes more opaque, and it's a different sort of employee relations dynamic. So I think people are going to find career paths more opaque, and those of us that are going to do well as organisations are those who are able to illuminate the career path, give people greater clarity about levels of work in their organisation. But I think we're going to have a lot of headaches when it comes to onboarding. That's just not going to be as smooth and as easy as it has been in the past, and that's going to be a contributory factor to people leaving us early. What we call the induction crisis. I think we're going to see a uptick in short-term leaving. And lastly, future reward communication. I think the narrative is going to need to be much more values-based because that's where our employees' heads are. We need to tune into the target audience and therefore be more deliberate about reinforcing the desired culture through our messages. We are going to have to work that much harder to paint the big picture in a hybrid working environment because employees will not so easily get it, when it comes to learning the behaviours and how you get on around here. And we greatly underestimate the power of the peer group as a vehicle of cultural transmission to help us understand, what this organisation is about and how we should think and behave. We realise what we've lost more and more as the period of hybrid working and home working is extended. And in that sense, we're going to have to be a lot more deliberate in managing expectations and articulating what good looks like and spelling out to people what superior performance features in their jobs. So that is a rapid dash across the reward landscape. What I wanted to do was to give you a heads up to what I think are some of the real burning issues and the coming agenda, and to therefore try and provoke some thought and reaction. And then I'm very happy to take the conversation in whichever direction you might particularly want to go, just to open up that conversation more widely and more deeply.
Excellent. Thank you very much indeed, Mark. I love that quote about the few of us come to work because we're coin operated. There's a rich range of decisions that inform why we work we do and indeed why we leave. That was a good place to start, I think. So hands up on using the symbol on the right hand, top right hand of the screen, if you would. He said mansplaining how Teams works to a group of people who are probably on Teams all day, every day. Let's have your questions and challenges. Love to hear from you. Claire, thanks for starting us off.
Hi, thanks, Mark. That's really, really interesting. My question is really in relation to, obviously, there's going to be a sea change, I think, in relation to working more remotely going forward. And I'm interested in view as to how that might impact on reward. If you think about, for example, London, where a lot of businesses are, if you had people moving far away because they need to be in the office less, do you think there will be a change in the market rates for salaries for roles? What do you think organisations will do? Will they continue to pay London-based rates, or do you think they will seek to think they should be reducing pay because people's cost of living is a lot lower? Obviously, it'll be kind of a war for talent still, but I'm just interested in predictions around what might happen in that.
Okay, yeah, very some intelligent question, really. I mean, we've seen London allowance largely disappear and subsumed into market rate over the years. I think we will see a moderation in the differential between London's sort of inner M25 rates and nationwide rates. But I think it's quite important to understand the pay market in the UK. If you look at people in jobs, managerial and professional jobs, if you're earning more than, certainly more than 45,000 a year, the pay market is national and London. So actually, for a comparable role, you're paid pretty much the same whether you're in Plymouth, where there isn't a lot of alternative work, compared to Warrington, where there is lots of alternative work, compared to St Albans. For managerial and professional staff, there isn't much difference. There's a bit of a negative effect in Northern Ireland, and London has a premium. The big pay differentials across the UK are local pay differentials for lower paid workers. And it's all driven by travel to work zones. So if you look at somewhere like East Anglia, Cambridge is a real market hotspot. But if you travel 15, 20 miles north of Cambridge to places like March or Whittlesea, you'll find that pay levels are perhaps 15% lower than they are in Cambridge. And it's because it's really difficult to travel to work, and you'll get stuck behind a tractor, and there are all those fens to drive into. So people don't want to do it. So lower paid workers have always had a much greater propensity to work locally. So I don't think we will see much change in pay levels for people earning below 45,000. And I don't think we'll see a lot in managerial and professional pay, except some moderation of the London premium.
Interesting. So I work for a law firm, and we only have an office in London, but obviously there's other law firms who have regional offices as well. And I suspect they will be grappling with, if, for example, they have an office in, I don't know, Manchester, they have someone working in their London office who chooses to move very close to Manchester, getting paid currently the London rate, but living very close to Manchester. Is that right, that person is paid the same rate as a London lawyer, which is significantly higher than a local lawyer?
Yeah, absolutely, spot on. And what you've just put in neon lights is that value-based reward mechanism. So in the past, the conversation we'd be having 10 years ago would be all about market-based rewards, and what does the market do in London compared to Manchester. We've now, as you've illustrated brilliantly, we're now having a values-based reward discussion. And so suddenly we're propelled into considerations of the optics and fairness, and therefore, market rate is informative, but it's no longer the kind of the overriding consideration.
Yeah. Thank you.
Thanks, Claire. Nicholas just said on the chat as well, I'm seeing wage inflation outside of London for digital and tech roles, almost London money for the M62 corridor.
So there is. I mean, there's always been really exceptional pay inflation in scarcity roles, and some of those scarcity roles are cyclical, and some of them are structural. you couldn't find pastry chefs for love nor money 30 years ago, and you can't find pastry chefs for love or money today. Other things, there isn't the demand now for Java skills that there was in 2001, because lots of people have got those. So sometimes the market adjusts, but tech at the moment has got rude amounts of money. You see, the US stock market, tech market, NASDAQ, has doubled in value in the past 12 months. I mean, that is phenomenal. And however little we know about economics or business, you must think, well, hang on, how can those things be worth twice as much? So I think there is, what Greenspan years ago famously called irrational exuberance. I think the tech sector has got ahead of itself, and I think we are going to see some moderation out into the future, but possibly not before there's been a little bit more excess beforehand. That's but I think that problem there with high rates in scarcity areas, that's not pandemic led. It's just that that's just an expression of where we find ourselves at the moment, and that there are always certain cohorts within the labour market who can command premium pay.
Gotcha, Mark. Yeah, it makes sense. Other points, other challenges, other questions? Claire. Oh, you're on mute, Claire. Sorry. Hold on. Let me just. All yours.
Thanks. So my second question is really around pay gaps, whether it be gender pay gap or other pay gaps. I'm interested in your view as to whether you think we will see a shift in advertising for roles with salaries, as opposed to staying silent on salaries, because the suggestion is that women in particular will come in, not negotiate on salary. Organisations ask what current salary are you on, and then pay something around that, whereas men may come in and kind of be much more kind of assertive in relation to kind of starting salaries and negotiate on that. So if you're joining an organisation where it can perpetuate a kind of a gap, as it were, in the ideology that if you advertise roles with salary, an individual can know and feel more comfortable and perhaps seek that higher salary, for example. And it's supposed to be in principle paying for the value for the role. I'm just interested in your view on that.
Yes. So this is the good question. It's a challenge between the head and the heart here. In that, my experience of organisations across the public, third, private sector is generally people see the value of transparency in disclosing their salary structures, and they want to move to that place where there is order and structure in their salary systems, but they find they are constrained by legacy. So actually, if you were to publish your desired salary ranges, for example, you've just got too many people sitting outside of those ranges for that to be a comfortable publication. So therefore, I'm finding time and time again, people say, well, we really want to work towards transparency, but the actual distribution of pay compared to where we want to be is too scattered, it's too divergent, and it will just be, incendiary to publish this. And the added problem is that in order to move from where you are to where you want to be, is really difficult if pay inflation is really, really low. If you're running with 5 or 8 or 10% pay inflation, you can close gaps very quickly and bring people up to you within range. But it's like, you're really struggling to do that in a low inflationary environment. So that's one thing where, if inflation does, I think inflation is coming back. The question is how much and how fast. If inflation comes back to a greater extent than we would all like it to, it will prove an opportunity to sort out inequalities in pay gaps. And so, we shouldn't waste high inflation if it returns to us, because it'll be a great opportunity to deal with some of that values-based reward challenge. And so where do people go then when they say, well, I want to publish salaries, but I can't because of the history? They tend to go then into clearer disclosure about job levels. They try to show people much more clearly about how levels of work stack up in the organization. How you progress from paralegal to senior paralegal to associate to senior associate, and they would describe the traits, the characteristics, the experience that you need to operate at each given level, and therefore you tend to push your transparency into articulation of career paths. That's the way people go as the pressure release.
Thank you.
Please do anyone else come in. Just until somebody else does, I just wanted to ask. Oh no, because I think we've got Gui. Gui, all yours.
Yeah, hello. Thank you, Richard, and thank you for the talk, Mark. I guess I have a couple of questions, but the first one I have is around pay gap as well. So in the UK, we're required to report sort of the gender pay gap details for legal entities bigger than a certain number. Mark, do you expect the ethnicity pay gap to become sort of more legally and heavily enforced by the government authorities in the near future? Or with the pandemic, do you think that has gotten sort of a second, has moved into a second priority and it's not going to be looked at in the next few years?
Thank you. So, I would say there is an inevitable journey towards more and more disclosure around pay gaps, be that at the executive level where it's the CEO pay ratio, gender or ethnicity. I think that these kind of values-based disclosures are going to, they're going to continue to intensify. They will over time apply to smaller organizations than they have when they're first conceived. And you'll see, a lot of organizations trying to anticipate the compliance obligation and to do things on a voluntary basis. I've really been struck, for instance, at how many organizations have been voluntarily reporting ethnicity-based pay gaps. So that's a growing area. I think government's going to drag its feet a bit, and it's going to be a bit. It's been forgiving, hasn't it, on gender pay gap reporting? But then, on the other hand, if you look at other forces going on in society, it's hard to see how they're going to be allowed to stretch that out any longer. So I think we're going to get more of it. It's going to show up in smaller organizations. And I think it's going to become increasingly troublesome for us as well. So, for example, gender pay gap reporting, that's fine if you take a binary view of gender, but we're already seeing complaints and issues showing up in organizations where people are arguing that gender isn't as binary as the reporting system invites. Ethnicity pay gaps is pretty fraught, because determining what someone's ethnic background is not always easy to discern, even for the individual. You get into some very small sample sizes, and there are actually some inconvenient truths where pay levels by occupation throw up some really unexpected results, or at least unexpected results until you think about it a little bit more deeply. So, some of the most advantaged groups in terms of high pay, when you look at things from an ethnicity-based background, are surprising to the general population.
Okay, thanks, Ian. Thanks, Mark. I just wanted to bring in, actually, Sarah, could you, on that note of ethnicity pay gaps, Sarah Hogg, could you just say that you published yours? How did that go? I just, on that point that Mark was saying that it can be fraught. Sorry to put you on the spot.
That's all right. No, we're very proud. We published our gap last year. So it's very much part of our diversity and inclusion strategy. So we got buy-in with our board. I mean, to your point about the sample size, that was the big challenge for us is, you know, how we did it and the calculation. But we came to a good agreement. We got a good sample size in the UK, so we decided to go ahead. So yeah, we're very pleased, and it landed incredibly well with our employees and our network groups. So we got good feedback for doing that, and we plan to do that again this year.
Excellent, thank you, and thanks, Claire, for the note of the chat there. It may look to include social mobility in the future, although it's a tough one on the metrics point. Excellent. I think we're out of time, actually, just about. So I just wanted to say thank you to all of you for coming along. Mark, thank you so much for sharing your expertise. We're going to share the slides. We're going to share the recording as well. We'll put that out within 24 hours. But for now, we'll see you again soon. Keep sharing on the WhatsApp groups. And thanks again for coming.
Thank you. Bye-bye.
Thank you. Bye.
Thank you.